What's going on, traders? My name is Shark. Thank you for joining me here on our weekly prep and analysis for the futures market. We're going to be going over the E-mini S&P 500 index futures as well as the NASDAQ 100 futures, the NQ. We'll also look at some other charts and data points that we like to use to kind of formulate a thesis for the week ahead. We'll be also taking a look at some day trading levels and getting a bit more granular. Of course, if this is your first time joining the channel, don't forget to subscribe and like the video. It would mean a bunch to me and helps me keep on putting out more content for you guys. And for all the loyal followers and subscribers, I really appreciate the support, as always. Before we get into anything, reminder that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. And before we get into the charts, we got earnings season starting up again. So we're going to look at what we have in store for earnings this week, as well as the economic calendar. So let's go ahead and get into that to get the ball rolling. All right, starting off here with the economic calendar, let's pull it up. Okay, let's see what we have coming into the end of Halloween here. Monday, October 21st. Lori Logan speaks right before the bell opens around 8:55. And then I'm really not seeing anything for Monday. We do have a little Fed speak again before the market opens at 9 o'clock from Bowman. Beige book at 2 o'clock on Wednesday. Initial jobless claims on the 24th at 8:30. And then Friday, durable goods. And also on Thursday, let's mention here, U.S. Services PMI. Really nothing to look ahead of this week that concerns me. All right, let's look at earnings coming up this week. Got a couple of interesting names here. 3M on Tuesday before the bell opens. Verizon as well. Enphase after the bell closes. Wednesday gets definitely a bit more interesting with Boeing reporting, Coca-Cola, and everybody really will be watching Tesla after the close. Thursday, before the market opens, we got American Airlines, UPS. I think UPS is always interesting to keep an eye on, just for a broad look maybe about how the economy is doing. Other than that, that really closes out the week. So I think really everybody's going to be watching Mr. Musk and Tesla. I think Boeing again will be interesting as well. All right, so now that we've gone through that, let's start to get into the charts here and see what we can take away. Of course, we're going to start off just from the weekly perspective on a blank chart here before we get into some of our pre-existing charts that we have been trading from. So we did make a new all-time high here this week on the futures market, hitting a level of 59.27 quarter and coming down a little bit off the highs, closing right around that 59.07 half. So now what are we really looking at here? We just have a nice full body candle, really just showing overall, I would say, strength in the market. We've already broken out of this flag balance range here, and now we've made a new higher high. So really, as long as we hold, and this is just a continuation of a weekly continuation of this breakout, right? So really, as long as we hold over that 58.32, we'll say, there's really no reason to be concerned at all, And right now we have a new weekly high here, so we are going to mark that off as well. But we do have to pay attention here. We could see continuation Monday, usually more range bound, so we'll be looking for partial consolidation here. We can take this week's range, and it would be obviously a little bit higher. The low of the week was 58.50, but we can still say that the most bullish consolidation, if we are looking for that, keeping certainly above our 50%, but of course that 25%, we've talked about that many, many times. So about 25% there. If we see price consolidate here and start to build up power, then we will look for that potential break up into 59.50 and further. We're pretty much in blue sky territory now. So, every higher high is kind of, a newly achieved, obviously milestone. Ultimately, we've talked about this. I mean, it seems to me that 6,000, of course, is just going to be in the books as long as none of these major structural things start to break down. So, certainly going to be watching, obviously, this week's high, and then we're going to watch our 50% retracement as well. And I think that either one of these scenarios would be healthy. Even the 50% retracement of last week's range, I think, would be a little bit more healthy, just considering that we are in all-time territory now, and just continuing to push. So I'll be also watching right around the 58.80 thereabouts, and see if that certainly can hold for about a 50%. We start to get even under that, though. We have last week's high to also work with as well. So I'm certainly going to be a little bit flexible there, and that gives us down to about a 12-point range there, about just at 57.70, 69 thereabouts. So, pretty close. So anything, I think, still over last week's range, you have to consider it's still bullish. But any pullback here, certainly it can happen, and that is a decent pullback. But really, overall, from the weekly perspective, nothing to be concerned about, in my opinion. We could come back there and come back. Certainly, we could match these highs and then reject and stay in a consolidation type of pattern. That is certainly a possibility. But obviously, the most bullish scenario, and if you are taking along, if we do see any of these retracements, you're looking for that push up into the 50, 75s, and we're on the weekly, so we got to talk about 6,000 at that point, right? So that's what I would be projecting there. Now, of course, we're going to start to sing a different tune if we start to see the price break underneath here, and then maybe we can look for a little bit of a deeper retracement back into the highs of that previous weekly breakout right there, right? So we'll have to see what happens. All right, let's get here into the daily chart. I think that's all I needed really to go over on the weekly. We are going to also just point out here, we're still going to be monitoring. Oh, my mouse froze. Hello. Okay. Still going to be monitoring here on our overbought, oversold proprietary indicator, and we will see as it starts to creep up into that area. It is really not too much of a concern yet, but we're definitely going to monitor it. You can see here how long we stayed in there before we saw any type of drawdown. As you know, we've been over this many, many times. So we'll just be paying attention to that as well. All right. Okay. Let's get into the daily chart now. And from this perspective, obviously, on the 15th, we had a big down day. It didn't quite engulf Q's, got hammered a little bit stronger than on the downside than ES. ES has been, and we've talked about this divergence at length about the S&P really being the stronger market overall, along with the Dow, and the small caps and tech have been a bit struggling. Certainly think that with the rate change here from the Fed, and they make borrowing a little bit easier, this IWM will benefit from that. So I do think that that will be progressing and reflected in the price action as we move along. with these changes in policy. Okay, here, so from the weekly perspective, you can see here at the top that we've got mapped out. It's pretty much that low from the 17th that you really want to be paying attention to, in my opinion, around that 58.70 area. Anything trading under that, okay, then I think, like I said, we can come back down, trade back into the top of this prior consolidation. And if we break down, there still really is even, the whole break of the structure itself really comes down a bit further. So you could really even say probably to about down around 5807, and even then I would say 5800, right? It's only 7 points away, so really 5800 there, which is 100 points down, of course, but that is only, of course, if we really started to penetrate through this high here around that 58.32. Of course, anywhere in the zone, you'd have to consider, if we did break, that this could be a great spot, to come back, retest, and then we start to make our way back up. Now, of course, do we break? Who knows? But from the daily perspective, that certainly is a buy zone, in my opinion, right there, if we do, in fact, come and retest that area. With all that said, again, if we are just hanging out up here, got to consider this the most bullish consolidation, and then we look for that new higher high. Oh boy, that was ugly. That new higher high to be put in. But until that happens, we're pretty much in a standstill here over the next couple of sessions, and we'll have to really see what they want to do. No real economic data on the horizon, and Tesla, although a very popular name, I don't think really will move the market too much. It's not something like Microsoft, Apple, or Amazon, which are much heavier weighted in the indexes. So, but either way, it's a cult stock, so everybody will, of course, be watching it very closely. All right, I think that's everything I wanted to go over from the daily chart perspective. Let's just take a peek here at our chart that we had already made from before, that we had been working with over the last couple of videos here. And oops, okay, that's not what I wanted to do. And this is not the chart that I wanted. Okay, here it is. Okay, why isn't this expanding? There we go. Okay. So from this perspective, and this is actually a little bit off. That's a bit better. So right around 58.80, I think that can be our pivot. I think from an intraday bias, if we're under that area, we do have a little bit of traffic here by these two lows, but certainly if we see daily acceptance, I think underneath this area, it would be really possible that we come back and retrace back into those lows. Again, we were talking about that 58.45 there. That's the top of that flag, breakout right there. And then there's the top area of that consolidation we were just looking at on the other viewpoint. So then it brings us right down again here into that 58.07, 5800, as we just kind of were talking about earlier. But underneath that, obviously, then we're going to have some more issues, and we probably trade down quite a bit lower. So we'll have to see what happens. It gets interesting for the bears, at least if they start to really break underneath that 58.45. But until then, we'll have to remain bullish here and just wait on this to see what happens if they actually, in fact, can break up above. The sweep below is the sweep above is a little concerning, I have to say. So going to have to see how that reacts. However, until we actually see some daily closes over, basically, from my opinion, 59.15, hanging out here, then we can really say that this overhead excess inventory is probably being worked out, taken out, and then we can make that bigger picture run up higher. So, all right, let's get into some day trading levels here on ES and see what we can take away for the week. Okay, let's extend these really quickly. How many days is this? Okay. Boom. All right. Perfect. Okay, so getting a little bit more granular here on the SPOOs. We're going to be looking at 5,900, 58.97 if you really want to get iffy about it, but basically 5,900, right? As long as we hang out over that, or I welcome any pullback into that area, have to consider a potential long there, in my opinion. 4 moves back up into that 59.20 area, giving you about 20-point trade probably to get out most. Could have some issues a little bit ahead of that in the 15s, very possible there. But then, really be looking to be into runners and having everything locked in. And then see if we can actually go ahead, accept, make another higher high, come back, retest that area. And if it holds, then we can look to go ahead and retest the all-time highs once again. But as I was mentioning before, on the daily chart, we have to see this whole zone. Is there inventory still here, hanging up above, waiting to be sold into? Well, it's very possible. And if we do see price come into that area, well, they might just be like, all right, here's my chance, and we're going to sell. And they're going to come right back down lower, right? So that is certainly a potentiality. And if that is another look above and fail, I would be a little bit more cautious about taking along anywhere in that 5,900 area. I would think that a little bit more panic would set in from the day trading perspective, and more than likely we would break through. And if that happens, you're not going to chase that. Wait for a little acceptance, come back above, and then you go ahead and hit it against that area for the short, down to about 58.75 zone. You got a little bit of a base here around 58.83, so you'll be paying attention to that as well. But ultimately, to try to get down real close here into this prior area, you can see we had multiple reactions right here, break down, boom, right here, break up, boom, right here, up, up. Okay, so big area right there in the 58.75 zone. So let's see. And if the bears are in fact able to break under that, well, then I would be looking a bit lower into 58.60 thereabouts. And then I'd be interested to see how price would start to react in this area. We do also have the highs here. You can certainly make a argument for 58.70. What I actually would watch out for here, I'm not going to mark it, but something, it's just something I'm just thinking of now. It's very possible we see a flush. They take liquidity underneath the 58.75 here, and actually we sweep down into the 58.60s, 58.70s, and that's actually where your buyer comes back in, recaptures, and comes back up. That's a little bit more aggressive, but just pay attention if you see that it's sweep down into that area, into the 59.70s, about 5 points underneath that 58.75, and then you see price come back up and recapture that area, that on a new candle with whatever operating time frame you are trading in. Of course, remember, the smaller the time frame, the less powerful or the less acceptance it truly is about being over or under any price level. But if we do see that, say a 5-minute candle close, whatever your time frame is, back over that 75, well, to me that would be a kind of an automatic attempt at a long for trades back up into that 5,900 area. So, and that would be a nice gain there. So watch out for that. If we do in fact break up over all-time highs, again, it's really hard to predict exactly where we go, but I would have to say that to me, ultimately, I know I talked about the 6,000. I don't think that we get there, obviously, from the day trade perspective, but certainly if we got over 59 30, I would have to say, going to be looking at around real close to 40, and then about 43 half, I would say, and then see about 45. So that's what I would watch out for the long side. At least on the hourly here, we are getting a little spicy, but nothing too crazy. So I'll be watching for that as well. And just remember, I mean, if we do have the potentiality, as we talked about, even trading in a range like this would be pretty disgusting. Or we could just trade in a range like this, that would be a little bit more acceptable. But certainly a potentiality, as we did go over that extension of the weekly breakout. And, really from a weekly breakout perspective, it should go more. So I don't think that that's done per se, but it's not going to go in a straight line. That's for sure. So, okay, let's move it along here. That's everything I wanted to go over for the E-minis. Let's move right along and head into NQ. And of course, we're going to start off with the weekly chart and a blank chart here and see about the bigger perspective on the Snazzy Naz. Okay. Well, not much as far as that weekly range, I'd have to say. Kind of unimpressive here, but we are moving up. Not, the momentum over the weeks is not anything like we saw here from back in early September. Still smaller candles. Certainly, I mean, for some pattern traders, you certainly, it's certainly, you could certainly make this type of argument. Again, invalid unless we break a trend line here. But it is getting a bit steep with these candles looking smaller and smaller. Basically a doji here on the weekly. I mean, it made a slightly marginal high, I guess, but a weak high, I guess we could call it. We were talking earlier last week about this whole area here, and we're coming back into this zone here. And very similar to what we were talking about on ES there on the daily chart. On the day trading chart just a moment ago about that overhead inventory here being created. You got these wicks right here as a potential sign of that. So this whole area, there's also kind of no surprise that we are making our way back up into this zone because, of all this trapped liquidity up here that the market's going to go out and want to seek out. Now, what happens? Do we actually start to break in and the auction starts to balance itself out to be able to come up into the new highs? Well, we'll have to see about that. But there certainly is the potentiality as we are up here that this is kind of a danger zone for sure in the market, in my opinion, and we could see the potential move or at least some continued weakness. As I said, as we talked about, NQ has been, of course, it is moving up without a doubt, but it has been the weaker market, obviously not making all-time highs here on this contract. So let's draw out, and we'll go back to our other chart that we've been working on. But I think that it's worthwhile just to kind of illustrate here, and you can see the market just peeked its little head to say hello. Boom. Okay. And we're on the weekly time frame, so these are going to be a lot of bigger ranges, of course. Everything here for now on that I'm going to be mentioning is going to be 20,000. So basically we could say 600, right? NQ really needs to accept over 600. And then we can talk about trading to REQ, right around maybe, it's basically 800. 790. It's more or less, it's very close to the weekly high of June 15th. It basically is 800. Okay. So, from the weekly perspective, if we close 1 week over 600, maybe 2 weeks, I wouldn't see why we wouldn't go there. But until we see a weekly close over 600, you gotta, really remain skeptical, in my opinion. And what's going on here? Yes, obviously, you can make, and it's compression, right? And a lot of the charts have been looking at this. It's quite the range that it could still, work itself out in. So, you got that two opposing forces here with the price, because without a doubt, we're in an uptrend. But can we at least attempt to neutralize at least this bear trend? Or this, I can't even call it a bear trend, but this divergence here, I guess. That's the question. So, but as long as the bulls, from the weekly view, and here you can see we're still, momentum's good on our Momo. We're not even getting spicy like an ES. And that is one thing that is something that I will watch, as we know that it can, all the markets, as we said, just can stay hot and spicy for a while. But the question is, will ES being hot start to really, still mess with this? I'm not sure. We still have the Dow just, making all-time highs, so that does help as well. Now, you can really see this balance area trying so hard to break out. It's a little concerning here to me, in my opinion, that it pushed over these weekly highs, over the matching weekly highs from the 7th and from the 23rd, which the highs there were basically, what is this, 538, and the prior weeks was a little bit lower, around that 508. I've just been shorting into this 500 level to no avail from the day trading perspective. But you could see here on this week's session, now we came up and the high was about 680, but failed back below into our balance. Now doing the same thing and creating that excess inventory over here. So, and we talk often about charts always being fractal, and yes, right now here we are on the weekly still. So even though we're talking about this area as that supply, you have extra created here as well as a failed break. So not good. Certainly underneath the weekly range pretty much, which is going to be that EQ of our structure here. Look at the high of the week of the 16th, right around 195, 200 thereabouts, which is pretty much the low, right, of this week, 206. Anything under that, certainly a threat to come back into this area. Here are these wicks lower, trading into 20K and potentially back down into the, now I'm referencing the 19,000s. 900 and potentially the high 800s, 875 thereabouts. Potentially coming back and retesting the range here from the week of the 30th. That low being right around 1915, we can call it right around there, 1918. And that's technically all still fine, right? Because still, overall, it's just coming into this area here, which was the break, right? We were in this bigger picture balance, right? And we're just coming back to retest that area, right? If we start to break underneath the highs, for example, of the week of the 26th of August, and really start seeing acceptance under 20K, under 860, 850. Okay, well then we have another issue. Then we can talk about something else. So what's it gonna be? Or it could run sideways. But for anything to continue, this needs to happen. Of course, this is a bigger picture breakdown. We're gonna be watching that 20,190, excuse me, for that 20K retest from that weekly view. So we'll see there. All right, let's get into our daily chart. I think that's everything I needed to go over from the weekly chart perspective. Here you can see things a little bit more clearly there, and you can see here at the bottom of this balance zone right here. Right, and you can see here the reaction too, and here it came up and tested, breakdown here again. This was that breakout we were talking on the weekly, right? So let's come into the daily here that we have been working on. Right, and it's still just really been, I mean, they really tried. They really tried, and then they just said no, boom. And it's a big, and we're talking when we were looking at the ES daily earlier, and talking about how it was not an engulfing candle, how NQ got hit a bit stronger. You can really see here how this candle engulfed. And the bulls had a chance to push the market lower here, and they really failed to do so, obviously, as we've come back up and pushed higher. But you can see here they had a chance for some bearish consolidation. We're really unable to do that. Once we had broken over the high here from the session of the 16th, it was game over that, basically over 400, 20K 400. Right. So I would definitely be paying attention to that area from the daily chart here. I'm actually going to mark it off, because if we start trading back under, I think then we can start to see some action back down underneath, look for some possible daily consolidation like this, and then for a move back down about that 120 area, 125. There's a bit of traffic, a bit over that, around 200 as well, so have to pay attention there. Of course, at these matching highs from October, the end of August, in the 220s to 200. Right, but again, we can trade potentially just in this area, and it's certainly tradable, but we have to be aware of that. Or, the most bullish thing, we see consolidation above the 400, hanging out here and we'll see if they can make that run. But as I mentioned before, we create it again, potential more supply over here, that's going to be an issue. So watch out. And certainly you can really see here that high right around that 600 on the 17th. And we're just going to mark it off here to kind of know, you know. Let's start to see, bulls want to see daily closes here. And then we can start to get here over 600. And then we'll go ahead and attack those 680s. And then see what they're really made of. That will give us free and clear moves. Up higher. 800 and 850, 865. So we'll have to see. All right, let's get into the daily chart. Excuse me, the day trading levels here. Not much has changed on the NQs, so I didn't have to do much for this one. Beautiful. All right, here we're looking at an hourly chart on the NASDAQ 100, and let's see what we can take away from that. Okay, so you can really see that reaction earlier in the week, right up in our zone here in the 650s. I mean, look at this one. We looked above here right at 9 o'clock, came in and just whoosh, right down. Look at that low. Perfect. Pretty much perfect. Right around the 300s for a nice bounce there into the open. Made a new low. Right real close to our 250 area. Right around 3 o'clock. What was the low? 254. Ooh, beautiful. Here they really drive it down, but that gave a nice opportunity into power hour, right into our 400 area right there. Either way, beautiful to see how these levels have reacted through last week, and we will keep them tight. Here, obviously, there was a little bit of trouble, but let's see now if the bulls can really still hold. This 480 area has been important. You could see how many times that we've broken underneath and gotten strong moves to the downside, but really never had that continuation underneath 450, bringing us down to 400. I'd still be watching for that, but just still be aware of that 450 area. We've seen multiple reactions in that zone. So, and just look from the hourly perspective, though, here about what's really going on. This is just brutal price action on Friday and can get you in a lot of trouble there. But, you know, if you are a range trader, just wait for those extremes in the balance, and then, you know, it's more quick in and out type of trades, right? So we'll have to see, but I think that if we really get some acceptance over 515, 530, okay, then we can come back up into the 560s, see what happens there. Big area, you can see the breakdown here from 405 here, and also here where we flushed. So a big zone there in the 550s. We'll see about price moving up into that potentially, and kind of matching this previous area here where we looked above and failed back below. So be careful there. There definitely is a potential short zone anywhere. I mean, it's about a 40-point area from 60 to 600, but certainly a zone that could see some sellers. Even if we break in, we could see something like this. Very, very possible. However, if we do not see any sells and we continue to just hang out here over 560, 550, then we will look to see certainly getting over 600, and then we'll look to trade back up into the 650s and see how that will be really the big test for the bulls, to see how they react in this area, because it has not been kind to them thus far. So it would be about the fourth attempt, though. So, you know, certainly can say that they could have more of a chance of breaking over. But, you know, you saw here when they did break over, they pushed it about 30 points higher here. So if you were to try a direct short in this area, I would say certainly smaller size and be ready for a 25 or 30 point stop there, because you have to take in these highs into consideration for these fake outs. And look here, I mean, even on the hourly, it was kind of probably a very tough trade if you were on a smaller time frame to be able to hold through that if you're not properly sized and understanding VIX being higher right now, and adjusting for these type of things. So that being said, if we really start to see the acceptance, as I mentioned, underneath the 480, watch the 450s, but under that, I'm looking for 400. Under 400, we can trade down into about 350, maybe 335, 337 area. Watch that. Certainly consider that for a bounce. I mean, 400 as well can consider for a potential move back in the other direction. Those are all zones, but from that bearish perspective, if we break under, that's where I believe we would trade down into. And then we'll see. Underneath 30, we'll look for the figure down at 300. So I'm not sure if we'll get there, but either way, that's about, a 200-point range that is potentially workable overall here in the market. So I don't know what we'll get. Not a lot of economic data ahead, but we'll see. So a little spicy here. Momo starting to slow down a little bit. So really, I mean, with all these look above, you gotta be just a little cautious there about being still looking for that long. But certainly if they accept, all well and good, then you can flip. But just be cautious here. I'm trying to be longing. I mean, yeah, there's certainly scalps from the 480s to the the 515s and stuff like that, and that's a trade for sure. But you just understand that we have to get up over these 535 basically for higher prices into the 560s. So that's all I've got for NQ. Let's move right along. The dollar, see what the Dixie's been up to. I think it kept going up when I was saying that it might pull back and then continue higher. But let's see what happened. I have no idea. Okay. Now, what was... 14th. So we were here. Okay, so 1, 2, 3. Okay, so it did go up for most of the week and only started to pull back. It seems like right at the end of the week. Yes, the end of the week. Let's take a peek here. I want to see if this flipped on the daily now. Oh, it did. Okay, interesting. All right. Well, certainly it looks like it is going to pull back. Trend strength. We are super spicy here on the on our overbought, oversold indicator. Whole wave here showing trend strength weakening, and we definitely got it closed below the whole. So this is certainly not looking like we will start to get more of that pullback, even though we do have a stronger long signal here overall with this now flipping out of a daily bearish downtrend. That being said, staying underneath 103.65, I think we could see a little bit more downside. Let's see about retesting this prior high here up into and it's not that much lower, but this prior structure breakout right around 103.40 area. See if that holds. I think it probably, in my opinion, would probably break. It needs to cool off and see this come down a little bit lower, maybe right around that 103, 103.15 zone, very possible. Underneath that and looking a bit lower down into the high, let's see, 102.80 thereabout. So we'll have to see how that progresses. But to me, it looks like the dollar will be cooling off here for a little bit. Okay, let's see what TLT is doing. and then TNX. Okay. Now TLT, here we are. This is not, there it is. Now after a magnificent run, the tide really have turned here, and TNX of course has been continuing to go up higher. I'm going to see here now. We are starting to level out. Momentum starting to shift here a little bit in the overbought, oversold indicator. And we do have price here on our whole wave starting to move underneath. I think this is a little bit constructive. You can see here we did start to have a push back up into that 96. We didn't quite get to the 96, but it got right real close to it and then pulled back. But I do like this 93. As long as we can hold over 93.30, I think it's potentiality that we could still start to see a little bit of an upturn. Let's see if they can get price back over 94.70, 95, and then and then have that potentiality to come up and attack back up into this area here. But we have re-entered a bear trend here on the daily. So really, from at least this perspective, unless price gets back over at 98 half, it's going to be a pretty much short situation. So look to see if we come up anywhere into this area, you could see it just peel back down, as this will just continue to build up for as far as selling pressure is concerned. So to me, it looks like TNX is going to continue to move up higher. But I do think here this is setting up for a little bit of a retracement. Again, how high it's going to be, I'm not exactly sure. At 96.65 is interesting. 97.40 is interesting. 97.80, and then 98.35. All short zones, but also all potential targets that price could get drawn into back into this area here. So that is very interesting. Let's look at TNX now. This obviously probably is clearly in a uptrend as we have been monitoring. Now, okay, well, this is interesting here. Now, getting a bit spicy. You can see we had our level we were talking about right around that 41 here, not really being able to get over that. So, this really to me is kind of really showing all the signs that I think the bonds probably will be going up for, at least in the short term, maybe a couple of weeks. And this will be cooling down. You can see price perfectly rejected our area here right around that 41, excuse me. And now although we do have a bull trend certainly created from this indicator's perspective on our swing arm, we definitely have our whole wave here getting underneath price. That is not good, at least for the bulls. Gonna need to see that acceptance over 41, 41.30 for moves back up higher into potentially, well, I would say maybe up into 42 half, 42.80. But until that happens, I don't really see us being able to get up for a little bit. But really, overall, we could still trade back down underneath, or we could see underneath 40, 32, 40, 39. That's all fine. I mean, that would still not really mean anything to me as far as structurally breaking down. If we start to really break down under that, though, this is what I'll be watching here. This is going to still continue to build up right here and drift up higher. Something like this will take place, right? And if price does come back down and actually break, you can just come into that and then it can continue. Now, this is being, whether or not it breaks over that 41, I don't know, but I'm just kind of giving an example of what could potentially happen. So we'll be paying attention to that. I think short term, 10-year be heading lower and bonds heading up. So we'll see how that develops over the next couple of weeks. Okay, I think that's everything I wanted to go over from, yes, this perspective. Let's go right along here and just get into, let's just go look at how our yield curve is doing. Nothing's really changed here. VVIX, the VIX 1 day is not in anywhere that's really saying to me that we should watch for any type of spike or anything. It's just right in the $9 level, so nothing there. That looks interesting. Let's look at how many stocks in the S&P are trading over their 50-period moving average. It came back into that 73 reading, almost 73%, and then pushing up higher. Looking good here for, and this is kind of silly to do, but I'm going to do it anyway. Looking here for maybe some type of, push up and then boom like that, but it certainly looks like some type of flag to me. I mean, and the 200 SPX is looking all fine and well. So nothing really here that is scaring me. New highs versus new lows. Had a little bit of an issue right around our 275 readings. Pulling off, but everything's still good here. It looks like junk bonds, high yields, kind of starting to stabilize here. Kind of balancing, so nothing really here to report. I guess the only thing I would say, this should be up higher. We still have a bit of a divergence because the market's just hit new all-time highs. This should be as well, or at least higher. Let's take a look. Let's take a look at the corporate bonds. LQD. Ooh. Well, this is a little uglier. Not a fan of this look, if I'm being honest. So that's interesting. Pay attention to this divergence, I think. Shouldn't be like that. One slight, potentially macro bearish point, but nothing really that concerns me that much. But let's look at the bonds. This is probably ripping up still higher. Yep, and this is still 7 years. Same kind of look, kind of based. Underneath, we've already been over TLT. Let's see if this continues upwards. This looks like it's going to continue upwards to me. The ratio between the 7-year and 30. This looks like it's going to break down. I mean, this is over the 50-period moving average now. This is doing nothing but oh, that's not what I wanted. This is nothing but making new higher highs and lower lows, or higher highs and higher lows. So we'll see. This is interesting. And finally, the transports, they've done what they needed to do. Transports and the Dow are now in lockstep. So, yay. No more divergence here. This is good. This is going to help out the overall breadth and of the market and continue talking earlier about Dow and ES being strong here. And this is really a constructive sign overall here for the markets. It came back in, retested here, this big, look at this huge balance, right? We've been trading in for, God knows how long. Let's just do this. really quickly. Boom, boom, boom. Okay, so we've been trading in this balance for, I don't know how long, and now it has broken. So this is great for the transports, for the markets in general. And, as long as the transports hold over, I'm going to say 16,300. It doesn't seem to me why we wouldn't go ahead back up and match the highs once again. And if we break over the highs, we're going to go to 1,700 on the transports, I would have to imagine. So, pretty interesting swing trade there, really setting up. Have to watch, getting a little spicy on the overbought, oversold. So certainly be aware if we start closing back under and it's a look above and fail, and that's not going to be good. But we're not there yet. Everything looking good there. So we've been watching that divergence on the transports for a while. All right, let's look at VIX here. Starting to peel off just a little bit. And we're talking underneath that basically 19 area. We would see lower on the VIX, broke down underneath that. And here we are. I do think that VIX will start to come back a little bit, coming into the elections as we kind of were talking about. But from this perspective, as long as we stay underneath 20, underneath 19, I want to consider that bearish and potentially see it move back down to that 1575 area. Very possible, maybe 17, right around in this zone here as well. So have to watch that, and you can see there's been a lot of traffic in there in that area as well. So maybe we just see a 17 handle and then we see a push up higher. That is a potentiality, but real close to that 16, I think, could be 16, 17. Let's see what happens there. Okay, and put to call ratio, well, starting to get a little offsides, but nothing too extreme that really raises any eyebrows to me. The VIX futures here still in backwardation, but making a slight push up, probably because of elections here. We're on we switch contracts now on the November contract, so that makes sense for the election. Sync and Tango here. This is good. The VVIX still over 100, under our 105, 103 level. Kind of really looking like a type of a rounded top situation here, like so. Maybe even we can start to make a inverted kind of cup and handle type of look, certainly. But we are still over 100. And I think that we're nowhere near our cool off zone. I think it's very possible we still stay over 95, 96, and from here we come back up higher once again, and that's good for traders. So let's keep that volatility rolling. Okay, I think that that's everything I wanted to go over for this week's video. Thanks so much for joining me. I really appreciate the support of you guys hanging out, and give yourselves a round of applause for prepping and studying up while the market is closed. I'm a big proponent of you making your money while the market's closed, not when it's open. That's when the true work is put in. So great job, everybody, for joining. Again, thank you for supporting me. If this is your first time watching the video and you liked it, you learned something, it's free. Give me a follow. Really would appreciate that so much. And remember how we close out every video. Our motto here, let's plan our trades. Let's trade our plans. And a prepared trader is always a profitable trader. Well, not always, but it definitely puts the odds in your favor. All right, guys. Well, I hope you have a great weekend, and I will see you all on Monday out in the interwebs. Take care, and thank you again so much for joining. Have a good one. This is Shark, signing out.